Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the New Zealand versus US dollar. Today's day is June 17, 2024. Let's get started. Looking at the daily chart, the high prices that we've seen in the month of June have come up to test these high prices, which were swing highs basically within a pip of each other there between around the 0.6214 level. I think this high price came in at 155. And this high price last week moved just above those levels, which should have sent the price higher, but lo and behold, it was not to be, and the price started to rotate back to the downside. Let's take a look at the hourly chart to take a look at what that looks like. And here's our high price. It came in at 0.62152, and we moved above that level. And we actually stayed above it, or tried to stay above it, for about 3 or 4 hours there before the market said, no, can't go any further, and we started to rotate back to the downside. That move to the downside initially found support near the 200-hour moving average, broke below that level, and in trading on Thursday, the price traded above and below both the 100-hour moving average, 100-bar moving average on the 4-hour chart. That's these blue lines, and the 200-hour moving average above. That's this green line right here. Until the market broke below those levels, the battle was on. But once the price fell below those levels, the buyers turned to sellers and pushed the price to the downside. The corrective move off of that initial low came back up toward those moving averages, but found early buyers in the trade here today. We saw a continuation of the rotation to the downside. The next target comes in at 0.60987, right around the 0.61 level, and you can see that the 100-bar or 200-bar moving average on the 4-hour chart is starting to move up toward that 61 level. Increasing this level is important, not only today but going forward. So if the price were to break below that levels, it would open the door for further downside momentum. Now, looking at this, the price action since this low going back to April, to the high price that we saw here in the month of June, the 38.2% retracement of that entire move comes in at 0.6076765. Also, the 100-day moving average and 200-day moving averages are below those levels, down to 0.60604. So not only does the price need to get below this level, the 200-bar moving average on the 4-hour chart, but as most people know, I like to see the price corrective move off of a trend type move come down to and through the 38.2% retracement level. Also getting below the 100 and 200-day moving average would be another feather in the cap for the sellers if they're going to take more control. Now, conversely, we may see the buyers come in right here against the low price, right here against the 200-bar moving average, right here against the 0.61 level, with a stop below those levels. Why? Because, well, it's a risk-defining level, and traders like to trade against risk-defining levels where you can risk a little and make more than a little. So that's what this area might be for traders. So watch the 61 level. That's going to be our key barometer, not only today, but going forward for this currency pair. If we do hold support, we could see a rotation back toward this cluster of moving averages. If we do fall below that level, then it's down to the 100 and 200-day moving average, 38.2% retracement that we will be looking for. My name is Greg Michalowski with a Forex Quick Look at the New Zealand versus US dollar. Good fortune with your trading. Bye-bye now.